buy-to-let is dead in 2025. Or is it? For over 5 years, people have been saying that the buy-to-let market in the UK is dead. But what does the data say? In this video, we'll review what's happened over the last 10 years and look at opportunities moving forward to see if buy-to-let truly is dead in the current market. If you're new here, my name's James and this channel is all about helping you build and grow your knowledge about the UK property investment market, all without gimmicks or unrealistic promises. I'm the co-founder and managing director of a property investment business called Freighter Property Partners, but this channel is all about helping you grow your knowledge. If you like the video, don't forget to hit like and subscribe to the channel, but let's get started. Since 2016, the average property in London has grown from 490,000 to 566,000 pounds. This is not very good growth, and when you take into account inflation and what actually happened in London from 2008 to 2016, the picture is looking pretty bleak. Having said that, the main reason for this lack of growth in and around London is affordability. The average people or the average couples in London now can't afford the average home. The reason for that is not just domestic investment, but London is a global economic hub and it's brought investment from all over the world that props up that market. So if you want to invest in property and be a hands-off property investor and you're looking in London, the chances are you're looking in the wrong place. In that same time frame since 2016, the average property in Manchester has grown from £140,000 to £250,000. If you look at the entry point of this market, when you might have needed £45,000, you look at leveraging your investments, the return on investment here is significantly better than London and really blows it out of the water. If you look at the data, like the Land Registry, ONS and other statistics, places in the north has performed significantly better than places in the southeast, London and the southwest. Since 2016, the growth in London has been somewhere like 15% compared to places like Manchester and areas further north that have had anywhere from 70 to 80% growth in that same time frame. This means more equity and a stronger return on investment, especially when we've leveraged our investments. The obvious reasons for these other locations performing significantly better than London in the last 10 years is affordability. Both Zoopla and Nationwide in the last 12 months have announced that the main factor impacting capital growth across the country is affordability in locations. The ONS put lots of data together looking at affordability of locations, and the average property in London is way over 9 times the average household salary. Compare this to other locations and then look at the fundamentals like employment, institutional investment, transport links and so on. You can really start to identify other locations if you're looking to be a hands-off property investor. This isn't saying that London is completely dead for property investment, but it's not targeted for a hands-off property investor at all. You need to be a developer, a builder, or be really good at delivering high quality project-based property investment. These include things like commercial to resi conversions and so on. Even if you're good at this type of thing, you still need a hefty pot of cash behind you because of the entry points in London. But if you're a property investor or you want to invest in property and you don't have time to spend time on big time consuming complex projects, the chances are you should look further north in the country. Places like Birmingham, Nottingham, Manchester, Leeds, Liverpool, Sheffield, places that have strong fundamentals but are still affordable in the current market, and you can see that data online. This means that you'll still be able to buy properties and refinance them every few years because of the appreciation of the asset, release equity, use the equity for your next down payment and recycle that over and over. If you look at Savills residential property price forecasts, they're still expecting strong growth across the north of England. And the main reason for this is demand still continues to outpace supply in those affordable locations. So is buy-to-let dead in 2025? If you're investing in London and you're expecting strong returns that you would have had back in 2010, then yes, you're going to be disappointed. But if you approach property investment in the right way, look for the fundamentals, find the affordable locations and invest in properties that are likely to grow in value, there's still great opportunities in the north of England. Property investment has changed significantly in the last 10 years, but not just for buy-to-let investors, it's changed for buy, refurb, refinance. It's very difficult to release all of your equity in a buy, refurb, refinance in the current market. It's changed for HMOs because of changes in legislation with the government. It's changed for short-term lets. It's now very difficult to do short-term lets in London, and it's likely to change in other locations in the country, but there's still great opportunity to build wealth through property if you approach things in the right way, you use data to inform your decisions, and you be patient. There's no denying that the market has changed within property investment, but it doesn't mean that there's no opportunity there. It just takes a more focused and informed property investor and has weeded out the casual investor to a true property investor that is approaching things in the right way. I'll put some links in the description for resources like the land registry, Zoopla house price data, and some other stuff for you. And if you are looking to invest in places further north, but you're based in the south and you're looking to partner with someone, then I'll put a link to my company and you can have a chat with one of the team for free without any commitment. But thanks for watching, and I'll see you in the next one.